Misión está comenzando. Todos los asistentes están en modo de solo escucha.
Hello? Hello? Can you hear me? Hello? Good morning and welcome to the CW Group and Research Team webinar on our global cement volume outlook. This is the first half outlook that we give each year for the global cement markets, which sort of focus on key markets around the world. Today we'll take you through a little bit of sort of who we are. We'll take you through what this report is that we release twice per year, both in the spring and in the fall, and then go through the different drivers, sort of what has been updated, what's been impacting the cement markets from our perspective, and as well as what we can expect then going forward for changes in terms of demand and supply. Next slide, please. So about the CW group to start with. As many of you may be familiar already, we're sort of organized into 3 different groups: advisory, research, and our media team. Across these different sectors, we cover cement and building materials, of course, green construction, traditional construction, and all the materials that sort of associate with that on the light and heavy side. We also cover steel, metals, mining, chemicals, petrochemicals of different flavors, dry bulk cargo, the movement of different cargoes, generally speaking, and of course the energy that goes along with that. Next slide. So on the advisory side, we essentially provide management consulting and transaction and support advisory for firms to solve their most complex problems. So we work with executives across the industry in the world to effect M&A transactions of different capacities, feasibility studies. We work on market sizing studies, and of course operational and other types of work. On the research side, we combine our industry knowledge with our research processes to develop a variety of research reports covering key areas of various sectors that we just mentioned. And of course, these provide sort of forecast, market insights, competitive analysis, as well as commodity pricing, cement pricing, research to support different decision making processes for our clients. And then use the media team. Of course, we have our market reporting services, but we also organize different meetings, webinars, and provide different data access streams. Now, the report today is the Global Volume Forecast Report, something that we've been releasing for quite a long time now, and many of on this call, and no doubt our clients. But just a quick update. We cover about 60 different markets in depth, which sort of move the vast majority of global cement demand. We, of course, provide regional and global outlooks as well, with a discussion on what we think has changed to offer our clients sort of that insight into what may come around the corner in both the near term and sort of medium term. In this first half of the report, we also provide a very long forecast report, a forecast update as well. So our view on 2050, which is more of a thought experiment and sort of a general directional, I guess, trend update on where we think the markets will evolve over the long term. So that's a little bit sort of perhaps what that end goal may look like and sort of what may affect that over time. This report is built on a lot of fundamental research as well as technical research. We combine essentially various, all the different information resources that sort of exist and sort of we have available to develop that qualitative as well as quantitative outlook in the sort of information-rich sort of process where we take all these bits and pieces, we model them in our quantitative analysis, we do both statistical and technical analysis, and then of course overlay that with our own views of the different markets. And that's how we then sort of iterate the information and come up with our outlook, looking at both consumption, production, utilization. We look at capacities by different markets. So this report, beyond those factors, something that's also important to notice, the March update is the abbreviated version where we do more of a quantitative update. We look at all the numbers, we revise them, and so true up things that have changed with things that have changed in the world on a macroeconomic side. The Update in the fall is the extended version, which goes into profiling specific markets and goes through the drivers, what's changed in those individual ones. And the spring one is the one that also includes a long-term forecast. Both of these are included with the subscriptions for this report. The work that we do for the cement markets almost always starts with sort of the macroeconomic perspective. Of course, the general state of the economy, the economic activity that takes place in the industry, at the industry level as well as the sector level, drives what goes on to no small extent in the construction sector, and therefore also impacts, of course, cement demand. So to start the discussion today, we'll sort of take a little bit of a look at the IMF's World Economic Outlook. And if you look at that across the last couple of updates, you know, starting sort of 6 months ago, 7 months ago in the fall, with sort of a small update in January, and then sort of the April 2019 numbers that sort of are fresh off the presses, as it were. The general trend after some, you know, periods prior to this of seeming improvement, the general trend is looking fairly gloomy at the moment across the world. There are multiple factors that are driving this at the macroeconomic level. Many are sort of obvious geopolitical factors. There's, of course, the US-China the ongoing discussions, US-Europe as well. And that has sort of time and time, even though the stock markets haven't really fully sort of, you know, reacted negatively to that. On the macroeconomic side, I mean, most economists are sort of of the view that we're shaving off a couple of, you know, dot points off the U.S. growth outlook, you know, for this year as well as for other markets, and this is something that a little bit of an uncertain factor how it will really play out in the end, whether sort of policies will sort of stay in force or whether things will sort of change course a little bit. So there's a little bit of you know, uncertainty around those factors still at this point that remain. But if we look at the current perspective, we're seeing sort of at the world level, advanced economists sort of coming down on sort of the growth outlook. There's of course additional factors that sort of still put a drag on sort of the growth curve, and we have, of course, Brexit, which is to some extent it just keeps providing that uncertainty, and sort of economic growth doesn't like uncertainty, even though it's still unclear what and how that will play out fully. It's just not good for the European Union overall, and sort of, you know, macroeconomic and monetarily, sort of, you know, still brings those question marks with them. European industrial production is also sort of weak. Questions around Italy, maybe not, you know, kind of a huge risk at the moment. Sort of on the debt side and the fiscal side, maybe, you know, there was more concern when the new government was elected. Now we'll sort of wait and see a little bit what sort of happens in sort of that part of the world. Commodities sort of with general global growth declining, there will be commensurate impact on the commodity side, which tends to hit the emerging markets and developing markets a little harder than sort of other markets and sort of developed markets. So we can expect those markets to see a little bit of a headwind in terms of growth as well. Obviously, growth there's still you know, more expected to be fairly robust as a group, but it's still coming down. Middle East and sort of North Africa region, still sort of a lot of commodity headwinds, oil prices. There are issues on a political level as well that sort of are slowing things down. But I think sort of the bigger concern is what sort of, you know, U.S. and European sort of growth, which will ultimately fuel demand for commodities in the other markets. So we're sort of at little bit at the crossroads, perhaps with higher than usual expectation of potential, bifurcation of fortunes here. So things could still steady up, and growth could resume, but I think the general economist community is a little pessimistic as to sort of where we're headed now. That combined with what seems to be a little bit more saber rattling in a lot of markets around the world than usual, it's just not the right backdrop to sustain growth at the levels that we would like to see. And consequently, all these different factors have had an impact, of course, on cement markets. And if I just do a little bit of a look back, what happened in 2018, it's not sort of huge surprises in terms of which markets grew in terms of cement volumes, and sort of from here we just sort of take a little bit of a pause before we sort of jump into sort of our outlook to remind ourselves where we came from. I think sort of Saudi Arabia and Turkey are sort of markets that disappointed significantly in terms of their cement growth. We were sort of surprised by how quickly these fortunes reversed. Perhaps in Turkey, it's the explanation is a bit a little bit more visible in terms of sort of political landscape, investment, fixed income. Sort of the economy has obviously slowed down tremendously with sort of the political landscape and sort of regime in place there, which has sort of dissuaded investors to sort of proceed with projects, and of course limited also the public spending in this area. On the positive side, we keep sort of seeing India being strong, Vietnam being strong, Nigeria, Spain surprised positively, but that's because it's also off a very low base. But Spain seems to have regained its footing sort of politically and macroeconomically, and we can expect sort of growth in that country to sort of continue going forward to some extent. So this is kind of where we came from in 2018, and then going forward, Carolina will now take over and sort of explain to you a little bit of our perspectives, give you a quick summary. Obviously, we can't sort of share like every detail in this quick webinar today, but feel free to reach out to us with any questions, emails afterwards, and those that are our clients on this call, subscribers to the report, you will be receiving the report shortly with all explanations. But Carolina, on that note, do you want to take over and present the outlook?
Thank you, Robert. Thank you, everyone. I'm Carolina Pereira, and I will start by giving an overview of what would be global cement demand from 2013 to 2023. We can clearly see a trend on which China is losing its share of global cement consumption, going down to around 2 billion tons in 2023. This is connected with the current and future environmental regulations focused on reducing CO2 emissions, and this will certainly pose an obstacle in the industry growth. Now, if we look at the global cement demand, we project a slight growth of around 2% in the next 5 years, driven by the expansion of emerging markets and developing economies such as India, Nigeria, and also Brazil. However, we forecast a decline in terms of per capita consumption, mostly triggered by the slowdown in China. Now, if we move to what is expected for the current year, 2019, in terms of cement demand. As you can see in the heat map, we project that cement consumption for advanced economies will increase, but of course, with the current geopolitical tensions, this will impact cement demand and what we can expect in the future. For Europe, for example, the political challenges presented by Brexit can constrain infrastructural investments and commodity trade. In the US, the GDP growth saw a slowdown, and of course that can always will also pressure the construction sector. Regarding the revisions made in terms of cement demand, when we are looking for our previous report, first of all, we can talk about Turkey. On the downward side, Turkey cement suffered the largest decline reversal in 2018 due to massive currency depreciation and aligned with lower consumer and investor confidence in the housing and construction sector. When we look at Asia ex-China region, we can see that this revision was led by India being the fastest growing region in 2018, majorly due to the general election that made infrastructural investments go significantly higher. Then we have Spain that continues to surprise with the fourth year of sustainable growth. Finally, when we look at the UK cement demand, that was plagued by the uncertainty of the nature of Brexit and is set to continue in 2019. Now, if we move on to this next map, we can see year-on-year growth variations for the next 5 years. We forecast that all markets will grow except for China due to its country environmental regulations. On the other side of the spectrum, we have Africa and also Asia except China, that are regions with the highest expected growth due to projected and future investments in terms of infrastructures. Now we can move on to the capacity side of our report. On the capacity side, both at the global as well as a global excluding China regions, we can see that according to our forecast, 2019 will witness the largest increment in capacity for the next 5 years. At the global level, 2019 capacity addition is foreseen to reach around 1%, remaining positive in 2020, the next year, but reaching a negative net addition in the next 3 years. When we are looking at the global capacity, excluding China, although following the same trend, we can see that in 2019 we have the highest growth, but the following years will also decrease, but with the positive net additions, not reaching net additions negative. Now, for our most recent section of the report, the long-term forecast. Here we give our directional perspective on a long-term cement demand by exploring what the cement world might look like by 2050 if certain assumptions were to play out. When comparing 2018 to 2050, we can see a significant increase in terms of cement demand of the total world excluding China of around 45%. On the other hand, China might suffer the sharpest decline, reaching almost 40%. Down on our page, you can see cement consumption per capita. This is kilograms per person, and our chart represents the per capita consumption ranges. So if, for example, we look at advanced economies, we foresee that rehabilitation projects can increase the range of cement consumption per capita in 2050. But as you can see, this is the group of markets that we foresee having the lowest range in terms of cement consumption per capita, due majorly to investments in green construction products and also the reduction of the clinker factor, for example, with substitute materials such as fly ash. For emerging markets and developing economies, we can expect the sharpest increase in terms of range per capita of cement consumption. The new and up-and-coming infrastructural projects and growth of these markets will intensify cement consumption on the long run. We can clearly see here that China will see a sharp decline in terms of cement consumption per capita, again due to environmental regulations. To wrap up our presentation, we will leave you with our three main highlights. First of all, a macroeconomic perspective. The current IMF projections and what we can expect of the world, of course, has suffered the downward revision, and therefore it raises fears of a new recession. Cement demand performed well in Asia ex-China, and this is the region that will keep and maintain its global prominence on the consumption growth. In terms of capacities, we see that China is the country and will continue to be the country with the sharpest declines. On the right side, you have our contacts. You can contact Robert Madeira, our managing director and head of research, and me, Carolina, business analyst. You have both our emails as well as our inquirers email and our company's website. Please feel free to ask us any questions, and thank you so much. Goodbye.